Welcome back, crypto traders. Today we're diving into a crucial topic for protecting your investments, risk management, specifically focusing on how to use stop-loss orders effectively. Whether you're a seasoned trader or just starting, this guide is essential. Let's get started. We all know the crypto market can be incredibly volatile. Huge gains are possible, but so are significant losses. That's why having a solid risk management strategy isn't optional. It's a necessity for long-term success. What is a stop-loss? One of the most fundamental risk management tools is the stop-loss order. A stop-loss is an instruction you give to your exchange to automatically sell your asset if the price drops to a specific level. Think of it as a safety net for your trades. By setting a stop-loss, you limit your potential downside and protect your capital from unexpected crashes. Why use stop-losses? And why are stop-losses so important? Protect your capital. They prevent significant losses by automatically selling before things get too bad. Limit your downside. You predefine the maximum amount you're willing to lose on a trade. Remove emotion. Trading decisions shouldn't be driven by fear or panic. Stop losses execute automatically based on your preset level. Manage multiple trades. They allow you to manage risk even when you can't actively monitor every trade. Setting effective stop losses. Where should you set your stop loss? There's no one-size-fits-all answer, but consider support levels. Look at key support levels on the chart. You might place your stop loss slightly below a significant support. Volatility. The more volatile the asset, the wider your stop loss might need to be to avoid getting stopped out by normal price fluctuations. Risk tolerance. Ultimately, it depends on how much risk you're comfortable taking on each trade. Implementing stop losses is a fundamental part of responsible crypto trading. Don't trade without them. If you found this guide helpful, give us a like and subscribe for more essential crypto tips. Let us know in the comments your go-to risk management strategies. Thanks for watching.